let's listen to CEO Tim Cook, who gives his rationale for what Apple did this morning.
We concluded that we had plenty of cash to run the business, and given that, we felt it would be the right action to initiate a dividend and expand Apple's shareholder base in the process.
All right, so as you hear right there, Apple in the news has been reported all over the place, right? A $10 billion buyback, almost $10 billion in dividends are going back to shareholders. To help me break down all of this, I have with me today George Stahl, my good friend George Stahl, and Tiernan Ray. All right, gentlemen. What's interesting about this is Apple, in one shot, becomes the second biggest dividend payer, right? I mean, the yield isn't so high, but the total number, you're talking about almost $10 billion in cash, they are today, in one fell swoop, the second biggest dividend payer.
Right, and I mean, that's just Apple. Everything is Apple-sized. You know,
That's a good way to put it.
The stock price, their cash holdings, their sales, their revenue growth, everything is just out of whack with everybody else. So it's kind of tough to make that comparison. Having said that, you're right. The yield isn't that great. It's 1.8%, and I think that might have disappointed some people who were expecting some more.
Yeah, Tiernan, what are you hearing about this morning? Are people disappointed?
The dividend yield represents about a 25% payout of their free cash flow for this year, and so that would be a little bit below, say, some figures of like 30%. Some people had been looking for a 2.5% yield. So yeah, the actual number is a little disappointing. Then again, the stock is up 45% this year, so one could say, what are they supposed to do? They can't control that.
It's amazing. They added $40 billion to this cash hoard last year. I mean, it's such a large number. I don't really think we can really put our heads around it.
And analyst came out today, said that he expected $75 billion to $80 billion in free cash flow for Apple over the next 4 quarters.
You know, they have so much money, right? And they've raised the expectations so much of what they do. Every time they come out with an announcement, it's something. So I made the joke about magical and revolutionary. Yeah. Was this just kind of like, do they have more money than they know what to do with? Literally, more money than they know what to do with.
Well, they did say, Tim Cook did say this morning, we allowed not only for what we need to run the business and for the growth we see, but a war chest for opportunities we can't even think of now. So he did set that aside.
And don't forget, yes, they do have about $100 billion in cash. But 2/3 of that is overseas.
Yes.
So only 1/3 is in the is in the U.S. So you're talking about 35 billion or so. And that's what they're focused on using. The overseas ones are keeping overseas because they don't want to pay the taxes to bring them back to the U.S.
And you know, you talk about the buyback, the $10 billion buyback. You know,
which is over 3 years.
It's amazing. I saw this morning Target just finished a $10 billion buyback, but no one's falling all over Target, right? I mean, you know, like other companies do these deals. They have these, but they don't get the attention that Apple does. I mean, Apple came out with this last night, and people were falling all over themselves to jump on the story.
Yeah, I think it's because we've had so much emphasis, we've written about it, people have written about it, that Apple is stuck in this growth stock portfolio track where the income investors don't care. And so one assumes this opens up this vast new terrain for all these other guys to invest.
It's true, because all of a sudden, tech stocks in the aggregate are big-time dividend payers now, right?
Well, yeah, you do. Microsoft and Intel have a yield that's bigger than Apple. That's a 2.5% and 3%. Intel's at 3%. But others are below where Apple came in. Cisco, IBM, Oracle all pay a dividend that's below where the yield that Apple's.
And now, I mean, tech has had a great year so far. A lot of that is Apple stock, obviously. But now, you're right, does this open up a whole new class of investor to the tech sector? People who just wanted dividend, just wanted that yield. Is this like another leg of growth possibly for tech stocks?
I think it's inevitable. I think that there will be a whole crowd of people who will come into the stock, and the early reaction from the sell side is, yeah, this is a good start, and to the extent that they've kind of laid out this framework for over many years, we will continually review this. It may even go higher as a payout ratio, free cash flow. Yeah, some people who have to be matched to this as an income source will say we've got to have some part of this in our portfolio who have not today.
Right. I mean, that was
we talked to one shareholder today who manages a dividend-paying fund had already added Apple under the expectation that Apple was going to be starting to pay a dividend. He was a little bit disappointed that the yield wasn't more, but has no plans to sell, given the fact that already the stock's up 45% this year.
It's what you just said a minute ago, how much money they're going to add to their cash flow this year. It's really not outrageous to expect that they would increase the dividend, right?
Oh, sure. It's absolutely possible. I mean, the most important thing going into this, and the reason Target maybe doesn't respond the same way, not just that it's not Apple, but that this is the first time Apple is laying out a discussion with shareholders about capital allocation, capital management, which means just as much as the yield, the aggregate dollar amount. It's saying we're now thinking about this, which is what people want to know. So people just want to know we have a plan, in other words, right?
Right.